Hey guys, welcome back to the channel. This is the road to 1 million trading the wheel strategy. This is episode 6, week ending 10/24. So I know I've been gone for a few weeks and I apologize for that. Really, it hasn't been too eventful in the market, still continuing the wheel strategy. But I had this really bad cough. And I mean, last week I put together the video and tried to record, spent a few hours, but I was just coughing so bad for like 3 weeks. I don't know what I had. So back at it again, still coughing a little bit, but continuing the series here. So as usual, I'm trading the options wheel strategy to $1 million, which is mostly consisting of selling puts and selling calls on high quality stocks, farming theta, and I think of it like selling insurance against these stocks, taking on the tail end risk for consistent weekly and monthly income. As usual, this content is not financial advice. Please consult a licensed financial professional before making investment decisions. So going into my weekly portfolio update here, so far into, and I'm switching up the content and the structure a little bit here, but please let me know if you guys like it more or less, but I think it just makes more sense, and I'm all about continuous improvement of these videos and this channel. So this is going to be the last 3 weeks. The last 3 weeks, we are up $1,654, which is 0.63%. And year to date in 2025, I'm up almost 31 grand, which is 11.76%. And again, as usual with this series, Friday was a red day. And that's where you see the today, negative 0.33% down on the top left here. And the account value is sitting at $262,589. And I did deposit about 2 grand from my W2 job in the last month. So if you're following the percent up and the account value is higher, that's the reason why. But again, the last 3 weeks haven't been too eventful, especially this last week, only realizing HWM, which is a new ticker on this symbol that we're going to get into later in the video. Selling Intel, which has been a long-term hold, and then also an assignment of Root Insurance, and then IBIT selling that, which is the Bitcoin ETF, IWM, and of course Palantir. So $1,429 realized in the last 3 weeks, which is just about, actually I think that's a bit less than 1%. So a little under target for this month, but we'll see. We still have 1 week to go for my goal of at least 1% monthly. So current activity. This goes into the structure change here. Instead of doing realized and not realized, kind of back and forth, was a lot of work, especially if I'm trading like 20 tickers. Right now it's 11 per week. It's a lot of time on my hands, so I'm gonna hit the main ones and do it by current activity and also realized and holding. So hopefully you guys like that structure better. It makes more sense to me and more visually appealing in my eyes. But getting into Spotify, it's been a channel favorite. And as you can see, we sold a put for October 31st, which is next Friday expiration at the time of this recording, at that 650 strike price. That is that blue line right there, which it went which slightly under on Friday's close, sitting at 645. So if it stays below 650, we will have to buy $65,000 worth of Spotify stock, which I think it's a quality company. It's been through a little bit of a downturn recently, a little turmoil with the new CEO, CEO stepping down and a new one getting hired, but still think it's a quality company. Their earnings are coming up, but still well above the 200-day SMA, and now it's sitting at a little below, or sorry, just touching the 200-day SMA and below the 90-day SMA, and RSI is in the oversold territory. So still like the fundamentals. I like the stock. I like the technicals. And as you can see, we are down $409 currently on this position. Russell 2000. This is one that, as you can see, it's 85%. This is the small cap 2000 ETF of the Russell 2000, which consists of 2000 small cap stocks like HIMSS and and some other big name ones like Sprouts Farmers Market, which is also a channel favorite. As you can see, we're 85% of the way there. A 238 put well above our strike price, so I think I'm just going to ride this out to 100, which, if you know my strategy, if it's above 50% and 2 weeks or more have passed, or less, excuse me, then I do sell. But in this case, it just hit 85% because of some pretty large red days, so it's always hovering around that 40-30% gain. So it makes sense just to hold it out to expiry. So this will be a few week hold. We'll see what happens. Still got 1 more week to go. Hims and Hers, another channel favorite, sitting at 42% gain and 39% gain. So about $270 here. Pretty volatile, still an uptrend. Sold to put at 48 and 46. So it's just touching that 48, about $1 above. It's below the 50 on the RSI. Been a lot of very volatile ticker with a lot of news, but I think I think it's gonna keep going up long term, and I think it's gonna, as you can see, had a strong bounce off the 200-day SMA. So I wouldn't mind selling some more puts after next Friday. But if I get assigned, happy to do so. But it's in green territory right now. Gonna ride this out to 100% on both. Webull Financial, you've seen me trade this stock once before. It had a huge IPO at the very beginning of this chart, so somewhere in May it looks like, and pretty flat since. I mean, it's in between probably $20, maybe $15 and $10 range, $9 range. So it's been trading pretty flat for a while with some juicy premiums. Right now I'm at 54% gain, $109. Again, expiring next Friday. It closed at 11.51 with an 11 put, so still a little bit above our strike price. But if I get a sign, I wouldn't mind as well. But because this would be our cost basis in the nines. So this is 4 contracts here of Webull Financial. So then now there's the realized trade. HWM, this might be a strategy you're going to see me employ more on the channel, which is actually a pre-earnings run up on stock. So I'm going to be selling options, sell the rumors of high quality stocks that the majority of investors are going to crush earnings. So there's always a little stock run up before. HWM reports earnings either in a week or two, and next week, I think, or maybe early November. But the earnings are coming up, and I thought this stock would do well to sell a 2-week put, which I realized at 100%. So realized $200, and yeah, just had some pre-earnings hype. So maybe I'll employ the strategy more going forward. Channel favorite, Palantir, realized 2 contracts, had a run up, and still trading some more contracts here going out of it. But same story as always, long-term trend, like the fundamental, lots of hype, juicy premiums, but not going all in on the stock either. Still doing only a certain percentage of my portfolio and diversifying in case things do go south, like you'll see here with my holdings. So then I wanted to give you guys an update on current holdings. Here is what happens when the wheel can go wrong. A stock drops below your strike price, you buy, and maybe it continues to drop below your strike price, and maybe it recovers. But in this case, I got assigned at the $90 strike price, putting my cost basis in the high 80s, and the stock closed at $76. So the blue line is my strike price. As you can see, it's a bit below. I'm down 1.1K or 13% on Root Insurance. Their earnings are coming up as well, and I'm thinking I'm gonna end up holding through them. I will not be selling a call through them because I don't like to sell puts or calls through earnings, just because of the volatility. And yeah, sure, the premium is there, but you're capping your gain, or you're capping your I don't want to say capping your downside, protecting your downside, but not, depends on what side you're on. I just don't like to do it. But I will sell a call after. I like to sell them on very green days. So if the earnings are very good, I'll either sell if I'm happy with the price, or I'll sell a call and continue to ride the wave out. So we'll see what happens with Root. It is in that RSI sitting in the mid 30s, so it's in the oversold territory. more on the bottom of the band, but keeping an eye on this. I still like the fundamentals, and I do think it's an undervalued stock, but the chart is not my favorite here. It's trading below the 90-day SMA, below the 200-day SMA, and we'll see what happens. Now, this one, Sprouts Farmers Market, another what happens when the wheel can go wrong, because it can. It's not 100% strategy. Sometimes you lose, sometimes you win, but I turn them into a long-term investment if I start losing. So sometimes they keep going down, sometimes they go up. That's the name of the game, but your winners should be more than your losers, and that's why I'm up about 12% on the year and growing the account. But Sprouts Farmers Market, earnings are coming up. Still have hope. Saw a nice little bounce up here off of stocks tend to like even numbers, so around the $100 mark. Had a nice strong bounce up to the 115, and then is down at 106 right now. So my cost basis is in the low 130s or high 120s, and I am not gonna sell a call either. I'm still riding the wave. I think they're gonna have a good earnings, but we'll see. I don't have the magic ball, but if they have a good earnings, I'll start selling a call if it gets to that 130s. But this is a stock that I feel like can easily, it's been on a downturn since August, but I think can easily switch up. The long-term trend is still positive. So down 20%. If it goes down more, I'll probably sell a put and double down if the earnings are bad, but we'll see when the time comes. Still keep an eye on it. And also, it got into that, once they had 100, it got into that oversold territory. RSI was in the 10s, so crazy oversold. And RSI is now at the 35, so still oversold, but trending up. So we'll see. Keep an eye on this one. Nucor was more of a cyclical play. I was clearly very early on the steel industry. This is a #1 steel manufacturer in the US. They make steel mills, and I was recently researching them on if the rise of data centers is going to help them out as a kind of direct/indirect catalyst with all the steel that's required to build all these data centers. And I think it is, but so we'll see on their earnings that are coming up also. As you can tell, it's earnings season, so this is kind of a big month for the stock market and November. To see if companies crush, if they give good guidance, and what. Nucor, I've been paying extra attention to their earnings reports just because of how cyclical the steel industry is, and it depends on a lot of factors, including just demand and things getting built. But I think I think they had their lows in May and June here, and I think they're been in an uptrend. But as you can see, short term, I mean, they're getting a strong rejection here on Friday's close from the 90-day SMA, but still above the 200 finally. So after a few months, so we'll see. My cost base is in the 150s, so we'll see where the stock ends up. Down 2.4K or 15%. So keeping a close eye on this one as well. But on the bright side, it does pay dividends. So hedging my, or not necessarily hedging, but getting paid something on my holdings. And this is a shorter term play. I haven't been holding too long. You guys saw me get assigned by this. I'm down about $300. I'm looking for 1K. I'm looking to sell at the 230 mark. But again, the earnings are coming up. And this isn't a tech company. Waste Management is a very boring stock to sell puts on and calls. It does not move very much. So I'm looking just for a 1K gain on this. But I was happy to get assigned at 220. A little early. Could have done 215, but I don't think that strike exists. I think it's only 220 or 210, and 210 has not touched yet. So happy to get a sign at 220 and looking to sell in the 230. But we'll see how they do in the earnings. Looking at this one closely and hoping to sell before year end on this one. Down 1.49%. TLT down $500 or 2.6%. I actually bought twice, once at 94, one at 91. And this is I think we're entering a cutting cycle with the Fed and the U.S. economy. So this is going to be good for the bond ETF. and I think it's going to continue to go up, especially with a rate cut coming up, I believe, next Wednesday potentially. So we'll see what happens. But this one I don't mind holding and keeping the portfolio because it does pay about a 3.5% dividend per year. So pays monthly, which is nice. And we'll see if it can kind of break out of this range here and go up in the mid 90s and above. But not planning on selling this one. Oxy. Now this one I bought a long time ago doing the wheel strategy and have been selling calls on it on very green days. As you can see on the first page, we just made like $40 selling calls, lowering across base a bit, but down about 30% or 1.7K, and early got in very early. This was one of Warren Buffett's favorite stocks, and the oil industry has been taking a hit, and energy in general, because of the Trump administration, and he wants to really push to keep prices low. By doing that, he's been increasing the supply in the market, and he coined the phrase drill baby drill, which economics 101, you increase the supply, you lower the price. So good for consumers, good for my monthly gas bill, and good for when I fuel up my car, but bad to invest in oil stocks. But we'll see. It's been rebounding a bit, took a hit in this last month, but looking to get back in the 50s again before I start selling covered calls, or high 40s. So this is how the portfolio is looking like, up 11.76% year to date, crushing the bond indexes as usual, but still lagging the S&P 500 and Dow Jones, which are up both 16%. So it's nice to see that the small caps are catching up to the S&P 500, the tech heavy. So I've been you guys have seen me trading the IWM. This is why I think they have some catching up to do, and I think they might even outperform the S&P depending on how big of a bubble AI is. But I'm not, again, no puts in the markets. I'm not shorting anything. But current open P&L 8K because of these long-term positions, and about 23.5K in cash available to deploy. So looking for opportunities, but probably going to wait till after earnings to start deploying capital again. So that's it for this week's video. Thank you guys for tuning in. We're sitting at 26.26